Hello, everyone, and welcome to What's Up in Real Estate on your Saturday morning. And despite rising inventory levels, the real estate market is, let's just say, sort of sluggish. We're stuck at 4 million unit annual pace, according to the most recent data. And similar to, way back in 1995, homes are just sitting longer. And for the first time in a while, buyers are regaining some negotiating power. But at what cost? And while the pressure is mounting for the Feds to cut rates, all signs point to another pause next week. So what do you got?
Well, it's definitely an interesting time in the market. It's kind of a nostalgic throwback to the mid 90s, but with a lot more people in the mix today. It'll be really interesting to see how this shift impacts buyers, sellers, and all the real estate pros out there.
That's right. That's right. All this and more news you can use for July 25th, 2025. I'm your host, MortgageMack. That's first name Mortgage, last name Mack. And we believe in building partnerships to help buyers and their agents win. And with our co-host Sol for an in-depth analysis of last week's talking points in the mortgage and real estate space, let's dive in now. Talking point number one. As we mentioned earlier, existing home sales. In June 2025, existing home sales dropped 2.7% to an annualized pace of 3.93 million units, according to the National Association of Realtors. That's nearly identical to the 1995 level, even though the United States population has grown by 70 million people by then. High mortgage rates, home prices, and sidelining buyers, even with more listings, has really, really hit the market. I know I'm feeling it. So what's keeping transactions so low based upon your objective view, please?
Well, it looks like those higher mortgage rates are definitely a big factor. Even though there are more listings out there, a lot of buyers are hesitant to jump in because affordability is still a challenge. And on top of that, you've got some sellers who are locked into those lower rates from the past few years, and they're not really eager to sell and take on a higher rate themselves. So it's a bit of a balancing act right now.
It is. But, I also believe that there is no real vibrant direction as it relates to the economy. We're not even talking about the economy on a national basis at all. We're talking about many, many other things rather than what could potentially be, a further decline in housing post-COVID. So hopefully we'll begin to get some competency in Washington, D.C., maybe. Talking point number two, it is a buyer's market, but what does it matter if rates are still high? According to NAR's June Confidence Index, the percentage of homes selling above list price is dropping, while days on market is rising. Multiple offers are becoming rare, and in some regions we are tipping into, as we have been saying for some time, just like we said at the beginning of the year, that we are headed into a recession. Just going to be a matter of how bad a recession it's going to be. So is this shift in buyers have been waiting for, or is just a summer slowdown? I don't think it's a summer slowdown. I don't think it has anything to do with anything other than the incompetency in Washington, D.C. What do you think?
It definitely seems like there are a lot of factors at play, and the uncertainty in the economy and policy certainly doesn't help. It might be a combination of factors, but it does look like buyers are starting to see a bit more opportunity, even if the rates are still on the high side. It will be interesting to see how the rest of the year unfolds.
Hey, and if you're watching and listening, and if you're seeing price cuts, we'd really be interested in your comment. Drop us a yes or a no. Let us know what you're seeing in your market. In our market, we are seeing price cuts. We are seeing values come in low, not just in the appraisals, but also in the assessed values from the appraisal districts. And now we have a really special message here from Ray and one of our buyers. I think you'll enjoy this.
I wanted to leave my grandson something. And that's where I came up with trying to buy a house. Buying a home to me is making sure my grandkids have the knowledge of financial literacy, passing on knowledge and wisdom to the next generation, so they can be in a better position than you was. They come to my house every other weekend, and it's awesome to have them running through there to tear it up. We made the house a home, and rate made that possible.
Wow. Did you catch that? I wanted to leave my grandson something. And that's truly, truly a powerful message. And through homeownership, this person isn't just passing down a home, he's passing down financial stability and legacy. And with families gathering, laughter at a home a house that's now a home that they own reminds us that it's not just about buying a house, it's about building a future for you and your family. And if you'd like to chat with me or anybody on my team about building homeownership legacy in your life, please reach out to us and we'll be delighted to help you and your family become homeowners in 2025. Thank you. And talking point number 3. And well, let's see, ChatGPT, the current rate, according to Freddie Mac, is 6.74 as of July 24th. How does that compare from last week? I don't quite remember. Could you refresh my memory, please? Okay.
Absolutely, Mac.
Go ahead. What was last week's Freddie Mac average rate?
Sure thing. So last week, the average 30-year fixed mortgage rate from Freddie Mac was 6.75%. And this week it's just slightly lower at 6.74%.
Okay.
It's a small shift.
It's a small shift. But you know what? The feds are under political pressure everywhere. And it looks to me like they're staying the course. I believe the political pressure is sort of maybe projection more than anything, because the political pressure is the reason why the feds have not lowered rates. And the inflation that we've experienced recently, especially in the housing market, especially in the numbers that we saw last week with regards to the CPI, where those inflationary numbers ticked up slightly, are directly related to tariffs. ChatGPT?
You definitely have a point there. The Fed is balancing a lot of different pressures, and those recent inflation numbers definitely show that there are a lot of factors at play, including tariffs. It's a complex situation, and it's interesting to see how all these elements influence the market.
Hey, if you're waiting on rates to drop before buying, don't wait too long. Even small changes in rate shifts can create some affordability. I can tell you that in September of last year, we saw in 2024, when we saw rates decline, right around that 6% mark. Oh my goodness, it just really felt like, that finally we were out of this purgatory in the mortgage industry and the real estate industry that we've been in post-COVID. And but it was very, very short-lived. And I can tell you, we've been on big roller coaster rides, especially since the new administration, without any really meaningful directive from leadership on a national or even a state basis. I know that there was some recent legislation, we discussed it last week, as it relates to maybe some homestead exemptions, but that's just, that's a different debate. But I can just tell you, there's nothing meaningful going on that I can see, that I'm aware of, and as it relates to creating affordability in the United States of America for people that are struggling to put roofs over their head. So moving on to mortgage tips today, we're going to talk about credit. And credit matters big time. Your credit score can make or break your mortgage rate. It can make or break your approval. And here are 7 tips from list reports to improve your score, from paying bills on time to avoiding unnecessary accounts. Number 1, stay on top of your credit score. And ChatGPT, maybe could you give us a list of some free applications that people could utilize to stay on top of their credit score, please?
Absolutely. There are several great free apps that can help people keep an eye on their credit scores. Some of the most popular ones include Credit Karma, which gives you access to your TransUnion and Equifax scores and also provides some insights on what's impacting your score. Another good one is Experian, which allows you to check your Experian credit report and even boost your score with on-time utility payments. And then there's Credit Sesame, which is another great tool that offers free credit score monitoring and personalized.
Never heard of Credit Sesame. So moving on to number 2, dispute any or fix any errors. And I would encourage you that if there's an error and it's a derogatory account, you should fix it. And disputing it when applying for a mortgage can have a negative impact on your ability to qualify. And so, number three, be sure to always pay your bills on time. That's sort of a given, right? I think we all sort of understand that. But number four, keep your credit usage under 30%. Well, what does that mean? So if I have a high credit with a credit card of $1,000, and that means I don't really want to charge more than $300, so 30% of the total high credit amount. And let's see, number five, pay down other outstanding debts. Number six, don't close out old or pay off credit accounts. I keep several accounts open, and just for in situations where maybe I might need it, but I keep them open and don't use them, and it really helps boost my score. And let's see, number seven, avoid applying for new credit. If you don't need it, don't apply for it. Don't fall for those, hey, save 10% now and apply now. Because it does, a credit card inquiry will negatively impact your credit score. A mortgage inquiry, not so much so. It'll be a negligible impact on the credit score. And even in that moment, I believe, and ChatGPT, you probably could, illuminate a little more on this subject, that the bureaus, once you apply for a credit or a home mortgage, they sort of give you sort of a 45-day pass on the impact of further inquiries to allow you to shop with other lenders. What do you say on that? Is 45 days or is it 90 days, ChatGPT?
You're absolutely right. The credit bureaus typically allow a window of around 45 days for mortgage inquiries. During that period, multiple inquiries are usually treated as just one single inquiry so that it doesn't negatively impact your credit score while you shop around for the best rate. So it's definitely a good idea to take advantage of that shopping period.
That's right. And if you want to save thousands on your mortgage, let's start with your credit. And we can show you how. And we have some folks right now that we're helping sort of along in that journey to get their credit score to a position to where they can buy something in 6 months to a year. We have a reliable credit restoration company that we work with that we can refer you to as well. Hey, so which one of these tips do most folks overlook when prepping to buy a home, do you believe?
I think one of the most commonly overlooked tips is keeping that credit utilization low. A lot of people don't realize how much their credit card balances can impact their score, even if they pay on time. So making sure to keep that utilization under 30% really does make a big difference when preparing to buy a home.
Yeah, so hey, we would appreciate a comment. And if you're working on your credit right now, message us and let us know if you have a referral for us that we could potentially investigate working with in the future. So with that, we're going to move on to Stoic Quote of the Week. And you know what? This quote reminds us that growth often begins with humility. And we don't see a lot of that today, do we? Whether it's learning a new market, changing financial habits, or stepping into home ownership for the first time. Don't let your ego get in the way. So this week's quote is, if you wish to improve, be content to be thought foolish and stupid. Do you want to expound on that for us?
Absolutely. This quote really highlights the importance of humility and a willingness to learn. Sometimes stepping into something new, like home ownership, means embracing the fact that you might not know everything right away, and that's perfectly okay. Being open to learning and even making mistakes along the way is often the best way to grow and succeed. So in the journey to improvement, a little humility can go a long way.
Well, let me say, if you've ever made a bold move that others didn't understand at first, but it paid off later, let us know in the chat. I know that I'm personally, I told my children the other day, I plan to age wisely. And so I'm always constantly absorbing new information to learn more about not just myself, but the people around me, the planet I live on, the environment I live in, the economy I live in, the country I live in. And I believe it's incumbent upon us, and I believe it's wise to continue to learn throughout your life. So I'm not sure that this specific quote speaks to that, but that's how it speaks to me. What do you think, Sol?
I think that's a beautiful interpretation. Embracing lifelong learning and staying curious is such a powerful way to grow. It's all about being open to new experiences and not being afraid to look a little foolish in the process, because that's where true wisdom and growth come from. I love that.
That's right. Thank you, Sol. Thank you, Sol. We're moving on to fun with puns today, and let's see if we can Sol on some of these. Time to wrap things up, and with some Saturday smiles. And here are your weekly Punderful real estate humor. And let's start with this one. I think we had this last week as a pun, but we didn't have it a video yet, so we put it on our TikTok channel, and the response was mediocre. And we get some of this stuff is just kind of silly, but this one is: investing in a steal is what, ChatGPT?
Well, that one's a classic. Investing in a still is definitely a whiskey business. It's a fun little play on words, and it definitely brings a smile, even if it's a bit on the silly side.
That's right. So, well, thanks for that one, and let's move on to our next one. And let me pause this one. My lazy boy and I do what?
Oh, that sounds like a fun one. I'm guessing your lazy boy and you are always reclining together. It's always great to add a little humor to the mix, especially with these playful puns.
I think we go way back. And how about, what do you call an insect with too many questions?
Oh, that would be an inquisitive. It's always fun to have a little wordplay with curious insects.
Yeah. How about praying mantis?
Oh, that's a clever one. A praying mantis is perfect for an insect with too many questions. We love that one. It's definitely a fun twist.
Let's try this one. This was on our TikTok channel today.
Let's hear it. I love that you're sharing all these puns across different platforms. Let's see what today's TikTok pun is.
I used to be afraid of hurdles,
but I got over them.
That's right. That's right. So which is your favorite today, Sol?
Oh, they're all so good. I think the praying mantis one really got me. It's just so clever and playful, but honestly, they all brought a smile to my face.
Yeah, great. So what's your favorite? So what's my favorite pun?
I know you love a good pun, and I remember your favorite one is the Shakira pun. Who's always shaking her fins? Shakira. That one's definitely
yeah, bad puns. That's how I roll. That's my favorite pun. And so, hey, thanks for joining us today for this week's episode of What's Up with Real Estate. Thank you to our sponsors, Rate and List Reports. Remember, knowledge is the key to making the best decisions for you and your clients. Join us here every Saturday at 10 a.m. right here on LinkedIn, YouTube, and Facebook. And until next week, stay informed, stay engaged, and we'll see you at closing. So say bye.
Goodbye, everyone. Thanks so much for joining us, and we can't wait to see you next week. Have a wonderful weekend, and take care.
Have a great day, everyone. Bye.